So you're thinking about higher education, and that's amazing. But let's be real, figuring out how to pay for it can be super stressful. Well, it really doesn't have to be. In this explainer, we're going to break down everything you need to know about education loans in India. We'll make it simple, clear, and totally doable.
Right. Let's get straight to the point. That admission letter you worked so hard for, how do you actually pay for it? That's the big question, right? And by the end of this, you're going to have a clear map to your answer. So let's start building that map together.
Okay, here's our game plan. First, we'll cover the loan basics, what's actually included. Then, we'll dive into your options, looking at banks versus NBFCs. After that, we'll walk you through the simple 5-step application process, help you figure out what's best for you, and finally, we'll answer some of the most common questions. This is your roadmap from feeling confused to feeling confident.
First things first. Before you even think about filling out a single form, let's build a solid foundation. You've got to understand what an education loan really is, and more importantly, what it can do for you. At its heart, it's this simple. A lender gives you the money you need to study right now. Then, once you're done with your course and you're on your feet, you start paying it back in small, manageable monthly payments. Think of it as an investment in yourself.
And you know, what's amazing is just how much these loans cover. It's not just your college fees. We're talking about the whole shebang. Your hostel, your food, books, supplies, and yes, you can even get a new laptop for up to 50,000 rupees. And if you're studying abroad, it'll even cover your flights. It's pretty comprehensive. Okay, this slide is probably the most important one for your peace of mind. Listen to this. While you're studying, you pay nothing. Zero. And even after you graduate, you get a grace period of 6 to 12 months to find a job before you have to pay a single rupee. The pressure is completely off, so you can focus on what really matters. All right, now that you know the basics, let's talk about where you actually go to get one of these loans. You've basically got two main choices, the traditional government banks or private companies called NBFCs. And trust me, this choice makes all the difference. So it really just boils down to this simple trade-off. Do you want the absolute lowest interest rates? Then government banks are your friend, but they are a bit slower and stricter about your grades. Or do you need things to move fast and be more flexible? Then you'll want to look at an NBFC, but you'll pay a little more in interest for that speed and convenience. And this chart really lays it all out. If you've got great marks, say over 70%, and you're not in a huge rush, a government bank is a no-brainer for that low rate. But if your marks are a bit lower, maybe you have a few backlogs, or you need a really big loan without putting up any security, an NBFC is practically made for you. I mean, look at that approval time. A month or more versus just a few days. That can be a total game changer. Okay, you get the options. Now for the practical part. How do you actually do it? Let's walk through the exact steps from start to finish. I promise it's way more straightforward than you probably think. See? It's just 5 simple steps. 1, get your paperwork together. 2, based on everything we just talked about, pick your lenders, and here's a pro tip, apply to 3 to 5 different places at once. 3, submit your application. The Vidya Lakshmi portal makes this super easy for government banks. 4, you'll have a quick, pretty casual interview. And 5, boom, loan approved. The money goes straight to your college and you are ready to go. Theory is great and all, but let's see how this stuff actually works in the real world. We're going to look at a couple of typical student profiles so you can see exactly where you might fit in. Okay, so meet Raj. He's got solid marks, 75%, and needs a 5 lakh loan. Because his grades are good and the loan amount is well under that 7.5 lakh mark, a government bank like PNB or SBI is absolutely perfect for him. He'll get the cheapest interest rate possible and you won't even need to provide any security. It's a clear win.
Now here's Priya. Her situation's a little more complex. Her marks are a bit lower, she's got a few backlogs, and she needs a big loan for her MBA abroad. For her, an NBFC like Avance is the obvious choice. They'll be okay with her academic record, and more importantly, they'll approve that large loan fast, without security, so she can meet her admission deadlines.
And you have to see this one. This is Fatima's special case. She has great marks, and as a minority student, she can get a special government scheme through the NMDC. Now look at that interest rate, just 5%. That is unbelievably low. It's way cheaper than any normal bank and will literally save her thousands and thousands of rupees. All right, let's wrap this up by tackling some of the most common questions and worries that students just like you have. We'll do a little quick fire round to clear things up. This is a big one.
It's a huge worry for so many students. What if your grades aren't perfect? Are you just out of luck? No way. The answer is a definite yes, you can still get a loan. This is exactly where those private companies, the NBFCs, become your best friend. They are designed for this. They'll look at your whole profile and often accept marks as low as 60%, backlogs and all. A really important question, are there any specific benefits or perks out there for female students? Yes, there is. As you can see here, pretty much all government banks offer a standard discount of 0.5% on the interest rate. Now, 0.5% might not sound like a lot, but trust me, over 10 or 15 years of repayment, that adds up to some serious savings. Okay, what about later on after you've graduated and you start paying the loan back? Is there any way to save for money then?
Oh yeah, and this one is a huge deal. Under something called Section 80E, the entire interest part of your monthly payment is tax deductible for up to 8 years. All that means is you end up paying less in income tax. It's a major financial win in the long run. So, to put it all together, here it is, your final cheat sheet. The whole point is to match your situation to the right lender. Seriously, pause the screen here if you need to. Find your profile, good marks, low marks, need it fast, and you'll see your best option right there. It makes the decision so much easier. So, there you have it. We've covered the what, the where, and the how. You now have a clear, step-by-step map to navigate the world of education loans. The only question left is, are you ready to take that first step and fund your future?